Silver and gold sounding the alarm. You're going to be shocked at what you hear today. We have so much to cover in regards to the silver and gold price. Guys, we're going to talk about bank failures. We're going to talk about failure in the economy. We're going to talk about nuclear war, geopolitical craziness, and stagflation. But let's get started by talking about interest rates and interest rate cuts, because that's what everybody's talking about. Like, we need the Fed to announce interest rate cuts just for silver and gold to go up. And I'm here to tell you that is not the case. So we're going to dive into that. But first, I want to give you a little heads up that tomorrow morning, Sunday morning at 10 a.m. Central Time, we will have Ted from Ted Speaks back in the basement. Many of you watched the live stream that we did together yesterday. Requested he come back. He's graciously agreed to come back to the basement. So if you want to hear more from Ted, get some of your questions answered, come back tomorrow, Sunday, 10 a.m. Central Time. But what is it about this silver and gold price, silver and gold market, where everybody's saying, oh, the Fed needs to cut rates? I'm telling you guys, the Fed does not need to cut rates for the silver and gold price to take off. As a matter of fact, the Fed could even raise rates, and we're going to dig into what Larry Summers had to say about that. It's very interesting. But what we need are negative real interest rates. Do you understand what that means? I'll teach you here quickly, okay? Negative real interest rates means when the inflation rate is higher than the prevailing interest rate. Now, lately, we supposedly have had positive real interest rates, which should have killed the silver and gold price, but it didn't. Okay, silver and gold hung in there very, very well. As we move forward and inflation continues to rear its ugly head, inflation's not going anywhere, folks. I'm sorry, it's just not, especially when you look at the fact that we're adding $1 trillion in debt to the national debt every 90 days. Hold on, I want to show you this very interesting article. Let's dig into this quickly and see how we're in the situation right now that it's untenable. Here from CNBC. Hopefully you can see this. Yes, you can. CNBC says the U.S. national debt is rising by $1 trillion every 100 days. Isn't that over $3 trillion per year at this rate? National debt now stands at $34 trillion. We learned that yesterday with Ted as we looked at the U.S. debt clock. Since June, the last two $1 trillion jumps occurred in about 100 days. The debt is growing, and the debt is growing at an ever-increasing rate. Now, what that means, let's just take a step back as we think about silver and gold. All this debt that the Treasury needs to refinance, I think it's going to be almost $10 trillion this year. People aren't going to buy that at low interest rates. The investors, people around the world are going to demand a higher rate of return because they know that the math behind the U.S. debt situation is untenable. It cannot be maintained. So when everybody talks about, oh, we need the Fed, we need Jerome Powell to lower interest rates, that's what's really going to make silver. No, what's really going to make silver and gold take off is this: negative real interest rates. When people realize that the Fed's going to need to print money at some point just to buy the debt that the Treasury needs to, we're in a spiral type situation, a doom type situation, barring some economic miracle, right? Maybe Joe Biden and Bidenomics will pull it off, but barring some economic miracle, about the only thing that can happen down the road is the Fed printing more money. Now, we know that that's basically what they've been doing over the last 18 months or so with this reverse repo program. We've covered that. It's a little complicated, I understand, but just understand that the Fed had about almost $3 trillion of cash on their books that they took from the banks because the banks had so much extra cash left over from the C-19 crisis. And let me get back here. Hold on. I want to see you guys again. There you are. Okay. And that repo money, that $3 trillion, has been slowly being fed back into the economy. Okay. And that's been being used to subsidize all this debt that needed to be issued by the Treasury. That is running out. So at some point, the Treasury is going to be like, we've got $10 trillion worth of debt we need to sell. Who wants to buy it? Right? And the banks are like, we're out of money, right? The Fed's the kind of stealth QE that was going on, the reverse repo program. It's over. Foreign investors, we know the Japanese, the Saudis, the Chinese, they're dumping U.S. debt. Who's going to buy it? It's going to have to be the Fed, and it's going to have to be with make-believe electronic money, okay? That will send inflation skyrocketing, in my opinion, okay? All right? And so the Fed doesn't need to lower rates. The Fed can leave rates where they are at this point. We don't care. Maybe they will lower rates. They could even, it's all the relationship between inflation, okay, and the prevailing supposed interest rate. And we know, right, we're dealing with cooked up government type numbers when we're looking at this anyway, whatever the real inflation numbers are. And this is where it gets interesting, super interesting for silver and gold, because silver and gold look out into the future. They are amongst the smartest, the wisest markets in the world, the history of the world, right? Silver's been money for what, 4,000 or 5,000 years? Gold, 3, whatever, right? They've been around the block a few times. Silver and gold, people make a big mistake. They think, oh, they react. Oh, the Fed said this. The Fed, the Fed, right? The world's biggest public relations firm at this point. No, silver and gold look out into the future. I've heard someone say, and I thought this was brilliant, they just don't look around the corner. They look around like 2 corners. And what they see is a situation that's untenable. What they see right now is a situation that a lot of us, what's the S word, basement dwellers? Stagflation, right? A stagnant economy. And we're getting bad economic news coming through now, right? We have bad economic news on Friday, housing related news. We got bad, I think it was PMI related news. A stagnating economy coupled with inflation, because now, right, thanks to our wonderful politicians, they put us in this position where it's untenable. All they're going to be able to do to deal with it is print more money. It's going to be silver and gold are starting to wake up. Right? Everybody says, oh, with the current situation with interest rates and everything else, gold should be at 1,500. Gold, there's a reason why. Oh my gosh, we forgot to celebrate. Right? Gold was up 2% yesterday, basement dwellers. Woohoo! Yes. Good day for gold. Good day for silver. Up almost 2% as well. And there's a reason why. And I'm telling you, and Rafi Farber put out a great video comparing where we are right now to the 70s. I don't think he specifically talked about stagflation, but he talked about it from his own perspective. Like, we are right at that point in the 70s. Nothing's the same, okay? Don't forget, right? Silver went, I won't even tell you how much silver and gold, for that matter, went up during the 70s because of stagflation. It's real. It's happening. And guess what? Yes, there's a bonus. That's why you come to the basement dwellers, a big, big bonus. Things are even crazier, even more exaggerated, more escalated now than they were in the 70s. We didn't have nearly a debt to GDP ratio like we have now. Thank you, Craig, for that super chat. Good to see you from Washington State. Thank you. We didn't have the debt to GDP ratio. They didn't even know what a trillion was back then, guys. Trust me. I was born in 1970, right? President Nixon, right? That was my first birthday present. He took us off the gold standard. They didn't know what a trillion was. They hardly knew what a billion was back then. Peter Grandich talks about that. We never even talked. Nobody said the word trillion. Okay. Let me just remind you, a trillion is a million times a million. Right? Big, 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 big money, big problems. Let's read through here. I have all these notes. Larry Summers. Let's listen to what Larry Summers says. I'm telling you, I know you're like, everybody's brainwashed into thinking, oh, they need the lower rates for gold and silver to go up. No, it's smoke and mirrors. It's funny money situation. We could even have interest rates rise. Okay, we really could. And gold and silver continue to do well. We can't always just rely on this on this dogma that we believe in. Let me tell you what. Let me show you what. Let me share the screen here. And where did it go? Uh-oh. U.S. national debt, Fed cut. Here, right here. This is from Business Insider. This is Larry Summers saying there's a meaningful chance. Oh, did that work? Yes. There's a meaningful chance the Fed's next move is a rate hike. Oh my gosh. Oh no. Treasury Secretary Larry Summers says 15% chance. His rationale is built upon a streak of strong economic data and still high inflation. Well, I agree with him on the high inflation, but not the strong economic data. Give me a break. There's almost no strong deflationary pattern in the housing and service sectors, he says. Okay. A wave of inflationary signals means the Fed's next move could be a rate hike, says former Treasury Secretary Larry Summers. There's a meaningful chance, maybe 15%. He said that on Bloomberg. All right. Again, guys, it doesn't matter, right? They can, okay, fine, raise rates again, one more time, whatever. They can't. The debt, the $34 trillion debt, the $10 trillion that needs to be refinanced can't absorb higher rates than where we are right now. This is not 1980. This is not Paul Volcker's world where he could raise rates to 15%. No. And at the same time, we have inflation that can spike again, and it can all feed back into each other. Then higher interest rates means Fed prints more money. It's a doom. It's a doom cycle. It's the best way I can sum it up. So it'll be interesting to see how they play that out. The only way, and let's get back here. I want to remind you guys something very important. The only way the system remains solvent, the only way, there we go, the only way that everything works, that they can keep this thing going, they can kick the can a little further down the road, is by inflating away the debt. That is what silver and gold. Thank you, David. Thank you, Metal Seer, for the super chats, guys. That's the only thing they can do. Okay. You know it. Okay. I know it. We understand it. You know, when I was talking with Ted Speaks, and don't forget, Ted will be back tomorrow. For those of you who've just joined us, Ted from Ted Speaks will be on 10 a.m. tomorrow morning, Sunday morning, 10 a.m. Central Time. He'll be answering some questions and sharing some more crazy information with us. But we talked about this yesterday. We get caught up in the symptoms of what's going on, okay, without looking at the root cause. And the root cause is that we're dealing with a Keynesian economic system, monetary system. And the debt has grown and grown and grown. It's a monster. It's a doom spiral. However you want to say it, the simple math behind it doesn't work. And now we're seeing all these symptoms, sky high inflation. It's going to be stagflation city, right? The economy starts to get hit. While at the same time we have high inflation, it puts the Fed in a untenable situation. They really don't have a right answer of what they can do at that point. And everybody, right? Remember Exter's pyramid? We've talked about that for years here in the channel. Thank you, Frank. Thank you. Everybody that's invested in stocks, in bonds, in maybe crypto, whatever, you know, this is not a crypto channel. Everything that's make-believe, synthetic. The only thing that's not synthetic from a monetary perspective are silver and gold. Everything else is synthetic. And everything else, you can almost make an argument, is in a bubble, right? They don't even put real estate. I guess real estate is real, but we know the prices of real estate have inflated beyond return. So everything that's up there in that pyramid is little pieces, right? Think of it as a big brick inverted pyramid, all resting on that silver and gold, right here, right where my hands come together. Little bricks start to fall out. And we've kind of seen that in the bond market, right? But when we really start to see the bricks start to fall out of that, it's all going to be trying to get into silver and gold. I mean, that's it. That's it. You know, it's going to be the last. It's like what's going on in China right now. There is a gold craze in China right now. I shared with you some information. 800,000 people showed up at one place to buy gold, right? The day after the Lunar New Year. right? Why? And this is what the Chinese said. This was a Chinese report about what's going on, because people don't trust the stock market, because people don't trust the bond market in China, because people don't trust the real estate market in China. So what's left, right? It's like you go to a restaurant and the waiter gives you the menu and says, well, we have 4 entrees. These 3 really stink, but there's one on there that's really good, and that would be the gold and silver. I don't go out to eat. It's too expensive. Suzie and I go out to eat at a restaurant that has a waiter. Susie's on here maybe 3 times a year at most, and it's a gift card I got from my generous parents or sister or somebody. Anyway, that's a whole different story. How's everybody doing this morning? I really appreciate you being here. You are the most important part of the channel. Thank you for the super chats. They go a long, long way to help support the channel, help support our family. So thank you for that. Please give this a thumbs up. That helps get the word out to more people. And don't forget, you can subscribe. Everything's free. Everything's free. What else could you ask for? Huh? All right, let's talk about the bank failure program. We got so much. God, there's so much going on. The BTFP program, the Bank Term Funding Program, March 11th. That's 9 days from right now. And are we seeing any problems in the bank sector? Let's just go over here real quick and take a look at this. Another article from CNBC, I'm sorry. Shares of NYCB, that's the New York Community Bank. Oh, we got 100 likes. Let's do the bell. All right, guys. Shares of NYCB, that's New York Community Bank, fall 25% after the bank discloses internal control issues. That means problems with their accounting, okay? NYCB has been under pressure in recent months, due in part to concerns about its exposure to commercial real estate. Oh, we almost forgot. We've got a commercial real estate crisis in the United States. My Lord, we forgot about that. Now, look, this is breaking news. Only basement dwellers know this. I have an idea what they're going to call. The Fed's going to come up with a emergency program, also known as money printing or a bailout, to deal with the commercial real estate problem. I want credit for this. I don't demand credit for a lot, but I think they're going to call it the CRAP program, CRAP, Commercial Real Estate Asset Protection Program, the CRAP program. And that's what it is, a bunch of crap. I can say that word, I think, on the channel. And I can't wait till Janet Yellen and Jerome Powell are having a press conference saying, due to the stress in the banking system that nobody saw coming, the commercial real estate program, we're announcing we're going to take the CRAP program to a new level. Anyway, enough of that. The bank also announced an amendment. Oh, yeah, they're restating their fourth quarter results. Yeah, there's no problems in the banking sector. Hi, who's that? Anyway, the stock price only fell 25% yesterday. Almost seems like a precious metal mining stock, doesn't it? I can say that because I've been through some bad days in precious metal mining stocks. But the stocks at I don't know, I looked before I came on, there it is, 361. Hey, boy, I tell you what, technology. Look, it's been as high as, here we can look. How would you like to own that stock? Ooh, yeah, just back in July, it was worth $13, and today it's at $3.61. It's down 80%. My heart goes out to anyone who's lost their money in that stock. But that tells us about what is going on right now in the commercial real estate sector and how it can impact the banking sector. There's stories about some building in New York changing hands with a Canadian pension fund. Did you hear that? For $1? $1? Nobody wants these commercial real estate buildings. And I was talking with Ted this morning. He brought up a great point, and I've heard this many times as well. You can't convert those into residential. People say, you can turn them into no. The plumbing, the infrastructure, the electric is completely different. It's not cost effective to turn a glass tower into a residential building. We had a big mall right here by my house. We used to take my daughters there when they were little, Chesterfield Mall. And look, I live in a upper middle class part of St. Louis. This was a massive mall. Like every big store was in there, everything. And it basically fell to the, I guess, retail apocalypse that occurred 4 or 5 years ago. And I kept thinking, why don't they just turn it into residential? And they are, but they're going to level it first. So we got big problems in commercial real estate. That is going to lead to big problems in the banking sector. The economic data. Let's talk about, do you own a car? Hold on, guys. Let me come back to you here. I bet you own a car, right? If you own a car, don't think of it as an investment. Don't think of it as an asset, because it is not. It is absolutely stunning what is going on in the auto industry. Let me just read you some statistics here real quick. Car repossessions are skyrocketing. Car prices on average have dropped by 14%. People are searching Google for how to get rid of car loans more now. It's like one of the top searches on Google, like never before. 40 million Americans are upside down on their car loans right now. Upside down. That means they owe more on the car than what the car is worth. Okay. Car prices across the board are crashing. And the reason why, right? Because during the C-19 crisis, people were bored and had money and wanted to go buy cars. So they were paying exorbitant amount. Remember when your car went up in value 3 years ago? And I kept telling everybody, you probably did too, like, guys, this is not going to last. This is not going to last. Well, it's not lasting. It's crashing right now. And you've got people, and it's dirty what goes on in the car lending business, right? Why you would ever loan somebody, $70,000 over 8 years on a Ford F-150 pickup truck. I mean, you got guys, and I'm not busting on Ford F-150 pickup trucks, but you got guys driving around Ford F-150 pickup trucks that maybe are worth $30K right now, that they may owe like $50,000 or $55,000 on. It's like a house payment, and it's really sad. But it's also, right, an indication. They say car dealership lots are filling up. I told you that mall they're going to tear down. They use it as an overflow lot for Tesla dealership, and it's like had like an unbelievable amount of Tesla sitting around there. Just remember, and I wanted to. This is something directly related to silver and gold and cars. At the end of the day, cars are functional for a little while, but they reach the end of their useful life. And then what happens to them? They get crunched up into little balls, little metal balls, right? Little metal, whatever, sections. At the end of the day, the only thing that's really valuable out of an automobile, after all that utility is gone, is the metal value for recycling purposes. I know it's not silver. I know it's not gold. It's steel, maybe aluminum, whatever. But nonetheless, what does that tell us about metal in general? Metals, right? They're valuable. That metal that started out the process of becoming a car is still valuable at the end, but the only thing valuable at the end of the process of that automobile's utility. It's the metal, silver and gold, right? We talked about we talk about this, that metal, this, right? This American Silver Eagle, absolutely stunning. Sorry. That came from Don the brain. Hey, the energy that went in to that metal will always be there, whether it was mined yesterday or mined 2,000 years ago. Let's move on. Oh, we got nuclear war to talk about, unfortunately. And hey, while I'm at it, I need to say thanks. Talk about metal. Thank you to channel sponsor. Where are they? Woo, I got too many screens. I'm still learning. Bear with me. Pimbex. Pimbex. If you want to get your hands on some metal, silver, gold, platinum, check out Pimbex next time you're in the market for online purchases of bullion. Okay, you'll find what I found. They always have the best prices. They always have the best selection. They always have the best service. I like it because that's where I go. It's a one-stop shop. I don't have to run around, spend 8 hours scouring the internet. I can rest assured, because I've made many purchases from them, that things will come on time. Their customer service is absolutely awesome. Okay. You want to work with a company you can trust, you need to do it for yourself. I'm not telling you what to do. I'm just telling you, you may benefit from throwing Pimbex into the mix next time you're shopping for online bullion. Hey, they can also help out with IRA conversions. You can talk to them about that as well. You'll find you get more metal for your money. Thank you, guys. All right. Thank you for that super chat. All right. Hot dogs. Who was that? Hold on a second. I want to say thank you. So thank you, Leanna. Wow, Leanne. I'm sorry. I didn't mean to call you Leanne Trevino. Thank you for that super chat. Nuclear war. Look, this is nobody gives this enough credit when it comes to the value of silver, the value of gold. We really don't. There's a big factor, right? I'll talk about Ted, right? Ted Speaks one more time, because, we talked about yesterday the root, right? The root cause of this battle between Keynesian and Austrian economics in terms of silver and gold. Another root support factor for precious metals is geopolitical uncertainty. I mean, really, it's one of the core roots, in my opinion, right? People don't trust each other. They're not going to trust their promises. And that's all paper money is. Think about it. That's all that any form of fiat paper money is. I hate this stuff so much, I don't even have any around here. Here, this is a Ron buck. That's a Ron buck. I'm too cheap. Here, I put a little print on the back. People don't trust each other's promises. People do trust this right here. Here's a piece of silver. Quickly, last piece I'll show you today. That's a silver heart I bought for Suzie. Okay, they do trust that. And when the world has geopolitical strife and turmoil, and do we have that? Oh boy, do we have it. Okay. Oh boy, do we have it. Let's listen to what. This is scary and not pleasant to hear, but you need to hear it. This comes about with Russia. We have escalations again in Ukraine. Vladimir Putin's equivalent, he spoke, it is equivalent of the United States State of the Union address. And what he said is scary, making threats that we've not heard in months. He put the Russian strategic nuclear forces back on full alert, okay? He's boasting about new secret weapons that have been developed. Some people think these could be nuclear bombs, possibly, that are shot down from space. I don't know, but they're ready and they're being deployed right now. All right. So I'm just giving you the news. All right. He claims that NATO is about to possibly launch an attack on Russia. This talk about deployment of NATO troops into Ukraine would be lead to tragic consequences. Here I have a quote. He said, everything that that means us, the West, or our leaders, quote unquote, are coming up with now, with which they threaten which threatens the entire world. All this really threatens a conflict and the use of nuclear weapons. And therefore, the destruction of civilization. Don't they understand this, or what? That's what he said, right? Like, don't you guys get this? Like, we don't really want to blow the whole world up. And I think most of you probably agree with me. We don't really want to blow the whole world up. No, he said, quote, they must ultimately understand that we also have Russian weapons, referring to the Russians, and that they know about it. Just as I now said, we also have weapons that can hit targets in their territory. All of this, as we get news yesterday that Ukrainian officials claim to have shot down 3 Russian jets and 6 additional Russian jets in the last week. At the same time, the Ukrainians are warning that they're running out of supplies and ammunition. And of course, they need billions of dollars in aid from the United States. Or they're saying that Russia could take over Ukraine possibly by summer. Look, this is not a political show. I'm not a geopolitical expert. I'm delivering to you what I think is some very scary developments that are going on just in Europe, just in the Ukraine. Okay, we're going to switch over to the Middle East next, but this type of uncertainty, I mean, this bifurcation that is going on in the world, look, we don't want silver and gold to do well on the backs. We just know silver and gold are God's money. That's the way I like to refer to it. And not religiously speaking. It's the universe's money. It's the planet's money. It's God's money, however you choose to look at it. But it is what it is. It is finite. It is finite. It is the timeless universal store of value. When stuff happens, and we don't want it to happen, but it is happening, so we need to be abreast of it, right? We don't want to be doomsayer, tinfoil hatters, but we do want to be risk assessors. And when we assess the risk that's in the world right now, on a geopolitical level, it's undeniable that having some of your assets in silver and gold are a smart move. That's just my opinion. Don't make any financial decisions based upon that. And while we got that, I want to say thank you to our channel sponsor, Fortuna Silver Mines. We're going to hear their fourth quarter in fiscal year 2023 earnings report this week. I own a lot of the stock. I am not giving financial advice, but I do own a lot of Fortuna Silver Mines, so I will be watching closely. It's a company I've believed in for years. Next up, we want to say thank you to First Mining Gold. Actually, I have an interview with Dan Wilton, the CEO of First Mining Gold, that went out this morning. You can go to the channel and watch that as well. You can learn more about First Mining Gold at firstmininggold.com. They just have like 2 5 million ounce gold development stage projects in Canada. And when we're talking about all this geopolitical turmoil going on, jurisdiction matters. Where the gold is, like we're big. If you don't hold it, you don't own it type people. No doubt about it. For me, if I am going to own a stock in a mining company that has a bunch of gold in the ground, hey, I might as well have it in Canada. What the heck? What else is going on? Let's just get up to date on what's going on in the Middle East. The Jerusalem Post says that Iran has given a green light for a regional war between Lebanon and Israel. This could happen within 10 days. Iran has apparently given Hezbollah the green light to attack northern Israel if the Israelis go into Rafah. I don't know all the details on this, but what this tells us is that there's potential for a new front opening in the Middle East conflict in northern Israel. We'll pray for the safety and security of everyone involved and hope that we can find some peaceful resolution in this world. But unfortunately, we can't control that, so we want to protect ourselves, protect our assets. One more quick thing here I want to talk about. Goldman Sachs. You think things are bad out there? Listen to this. The CEO of Goldman Sachs announced people living paycheck to paycheck are cutting back even more. You think so, huh? The lower part of the economy is softer, much less purchasing power than 4 years ago. Why? Because of inflation. Go figure, right? Inflation, the hidden tax on you and me, right? Average, everyday Americans, the hidden tax, right? They didn't want to raise taxes on the wealthy. Hello? Okay. Took her a little while. Oh, I just dropped you, Suzie. No more talking. Okay, I'll do the cowbell here in a second. Inflation's a hidden tax, right? The government could have raised taxes on the wealthy. No, they didn't want to do that. They decided to print money, which makes all the assets that the wealthy own, stocks, real estate, things like that, go up, up, up in value. So the wealthy aren't feeling the effects, the pain of this. But when they print all that money, right, that dilutes the currency, that creates inflation, and the average everyday American, yes, that's who pays the price. Absolutely. Okay. Let me ring the cowbell. I believe we got the 200 thumbs up. I can't see it on this new platform. All right, guys. Thank you for being here today. Thank you for being part of the basement. It's going to be crazy for us to watch and see how things play out in the coming months and quarters. We are going into this period. I mean, the bank term funding program is ending, right? We could have banking chaos going on, right? The reverse repo program, which has been nothing but stealth QE, is running out of money. Okay. A lot of that money was used to kind of subsidize what has been going on for the last year and a half. It is dropping from like almost 3 trillion down to less than 500 billion right now. We have all this uncertainty in the world. I mean, we didn't even talk about China and Taiwan. It's a big deal. And just domestically in the United States, right? This big election year. We could see some serious fireworks on a social level, on a political level. Who knows? I mean, it's just absolutely crazy what we're heading into. That's why we run to the safety. What are the Chinese doing? All right. They say winter is coming in China. That's what their common saying is right now. People are running to gold, and I'm sure silver as well, right? I mean, we saw what happened yesterday. Gold, let's be happy. Let's have a little party, basement dwellers. Gold on the COMEX, the spot price closed, if I have this correctly, $2,080 per ounce. Okay, I think it was a all-time weekly closing high, all-time high. Somebody correct me on that if I'm wrong. Silver is lagging. Remember, the silver to gold ratio has now stretched again to 90, right? All that energy, think of it like a bungee cord getting stretched out, going to fly back. I mean, gold is primed, and gold will lead the way, and silver will follow. There's absolutely no doubt about it. I was talking with Dan Wilton briefly last night, the CEO of First Mining Gold, right? And he was like, yeah, he was the one that informed me that this would be an all-time record weekly close for gold if it held above it. May or may not. What? All right. Well, I'll ask the crew. Suzie's asking me if the old gold bear, there he is right there. Okay. You guys know the story, right? He's blindfolded. I discovered that he was the gold bear responsible for the bear market in gold that we had. And I'd say the bear market's almost over. But when we get to 2,500, we are going to take off his blindfold. And yes, Peter Grandich claims he's coming to St. Louis to do it. But do you want me to let the bear, just for a few minutes, have a little peek with his eye? You can put that in the comments. And if we get a couple people that say yes, then we'll do it. Okay. Suzie, hold on. I gotta climb down here and get Suzie's walkie-talkie. There it is. I dropped Suzie on the floor. Where was I? I had some very profound thing to say about silver and gold. Darn it. Yeah, you know what it's like to be 50 years old, right? 54. I'm like an old man here, huh? No, as this year plays out, I was talking with Dan Wilton, right? And we talked about this is it. I remember. What?
I think people say
no. No? Okay. All right. Everybody's got it. Okay. We are not sorry, Gold Bear. You are not going to get the peek even with one eye. The situation is right now in the gold market. Okay. Think about this. We're almost to 2,100. What do you say? Let's get 2,100 tomorrow night. I'm ready. You're ready. Silver is primed. We know that. But there are no people, yeah, and Dan and I talked about this. There are no people out there that are holding gold at any price above 2,100. Very few people, because it only went above that for like an hour that Sunday night, right? So it's not like there's millions of people that bought gold at 2,150 or 2,200 or 20. There's nobody up there. Once we get above 2,100 and stay there for a little while, there's no resistance. That's called overhead resistance. There's not a big pile of people that are sitting in their basement in St. Louis saying, oh, I bought gold for $2,200. And if it ever gets back there again, I'm going to sell. No, All those people were people that over the last couple of years said, if gold ever gets back to 1900, or if gold ever gets back to 2000 or 2050, then I'm going to sell. Those people have all sold, right? So now there's a whole new group of people, and we've built a base, baby. Base. You got to love base, right? We built a solid base of people that have come in and purchased around 2000 that are going to be strong hands. I'm telling you, look, we know, I'm not going to lie to you. There's a possibility. There's always that possibility. A month from now, next week, 2 months from now, I could be sitting down here with that big sad look on my face saying, well, we got gold at 1700 or 1800. I don't think that's going to happen. Okay, I really don't. Look at what's going on in the world. Look at what's going on in the United States. Look at the numbers, for crying out loud. Right? It just doesn't, I see much higher prices for gold and silver, and I look forward to celebrating it with you. Not because we want to say we're right, but because we know, right, we have been fighting a very tough battle for the last few years, some of us for decades. I can raise my hand on that one, right? We know in particular, if you're invested in the precious metal mining stocks, the sentiment has just absolutely never been worse. It's really interesting. Think about this. This is crazy about what's going on in the precious metals sector right now. We got gold, okay? It literally, I don't want to be crude. I usually say a stone's throw from a new all-time high, but now we've moved into a spitting distance. I mean, we're right there, okay? Gold's like basically, you can almost say at all-time high territory. It is, right? But at the same time, sentiment for physical gold in the West is horrible still, okay? Hold on one second. This is crazy. Sentiment for gold in the world is very, very, very good right now, right? The Chinese, the Indians, the world central banks, you've heard that a few zillion times now, haven't you? So it is good for gold elsewhere, but in the West, in the United States and Europe, sentiment for physical gold is horrible, okay? Sentiment for silver and the silver price is absolutely horrific. Okay, horrible. On an A to F scale, I give it a D minus. All right, sentiment also. So you got gold sentiment, only good in the East, basically, bad in the West. Silver's just bad. Price, everything else. Okay, and the precious metal mining stocks, well, they're like, and this has nothing to do with the performance of the companies, because many of them are like really doing great and being very irresponsible, but the market sentiment toward them is an F. Okay, so we're in this crate now. This is the good news. We're going to have some good news, precious metals investors. If any of those three categories, or all three of them, even just improve a tiny little bit, doesn't have to go, doesn't Rick Rule says, right? When he talked to you, I heard him say this about silver. Silver doesn't have to be loved. It just has to be a little less hated, and it will have a massive move. Precious metal mining stocks, a little less hated, massive move. Gold in the West, right? People are draining gold out of the ETFs. That's one of the biggest ways to measure investor sentiment here in the West. Just a small little improvement, big move. We could have big, big, big moves. Look, don't make any financial decisions based. I'm giving you my truth. Listen to other people. Listen to yourself. But, how do I say this? Sometimes there's a saying, from the mud grows flowers, right? Sometimes well, I guess, basically, could it get worse? Yes, it could get worse, this sentiment. It could. It's going to be a heck of a lot easier. That's the good news. A heck of a lot easier. You can only wind up the clock so much. All right. You can't keep there's only there's much more room for improvement way more room, the path of least resistance, than there is for things to get tougher. Hey, thanks guys for joining me. Don't forget, we'll be back on tomorrow, Sunday at 10 a.m. Central Time with our friend Ted. Thank you for this. Oh, thank you to all the moderators for being here. Everybody, please, I'm going to do it. Let's type 88888 for those that moderate, because our moderators are great, right? Keeping the chat going and providing a great service to the basement. Thank you guys. Okay. And I will see you tomorrow. Hold on.